Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today. Dow Jones is down slightly, Nasdaq is up slightly, pretty much flat. Everything is pretty much flat. You can see in the heat map that Tesla is up 2.5%, Oracle is up 2.5%, Broadcom is up 2%, healthcare stocks are up. Financials are down. Meta is down 2%. Consumer defensive stocks are down about 2%. Oil is at $61 per barrel, and the yield curve is down a few basis points due to the ADP employment change being negative. I published a YouTube short on this one, and I'm going to start publishing YouTube long form videos as well. Highly recommend going to YouTube channel and following me over there. It's the same alias, Value Analyst 1. Let's continue with the daily article. Wall Street rebounds as rate cut hopes temper shutdown worries. The main U.S. indexes bounced back from early lows on Wednesday after weaker than expected private payrolls data boosted expectations for a central bank rate cut this month, allaying anxiety around the federal government shutdown. Traders sharply increased bets on a 25 basis point interest rate cut from the U.S. Federal Reserve at its next meeting after the ADP National Employment Report showed private payrolls dropped the most in 2.5 years in September. While the ADP report is a volatile set of data, it may be only employment data that you have for quite a while, said the global macro strategist due to the shutdown. And today's relatively negative set of data is probably outside of what the Fed would have liked to see. S&P 500 healthcare sector logged its strongest four-day rally since October 2022. Pfizer, Eli Lilly, and Amgen advanced 5.4, 6.5, and 6.5% respectively, and were among the top performers of the benchmark index. Pfizer and the U.S. President Donald Trump said on Tuesday they had cut a deal in which the drug maker agreed to lower prescription drug prices in the Medicaid program compared to its charges in the other developed countries in exchange for tariff relief. The S&P 500 tech sector rose 0.39%, Micron and Broadcom rose 7 and 2% respectively, and while Apple edged 0.5% higher. The gains also supported the Nasdaq. After trading lower for most of the pre-market session on shutdown concerns, investors soon found their footing. This is yesterday's. You can see here that the shutdown has not yet impacted the economic data, obviously, but also the markets, not as much. It's still day one, and we'll see how long it goes. If you have a guess on how long, I have a bet going on how long this will go. If you have a guess on that, let me know in the comments. U.S. government shutdown begins as partisan division rules Washington. The U.S. government shut down much of its operations on Wednesday as deep partisan divisions prevented Congress and the White House from reaching a funding deal, setting off what could be a long, grueling standoff that could lead to the loss of thousands of federal jobs. There was no clear path out of the impasse, while agencies warned that the 15th government shutdown since 1981 would halt the release of closely watched September employment report. Slow air travel, suspend scientific research, withhold pay from U.S. troops, and lead to the furlough of 750,000 federal workers at a daily cost of $400 million. The Republican President Donald Trump, whose campaign to radically reshape the federal government is already on track to push out some 300,000 workers by December, warned congressional Democrats that a shutdown could clear the path for more job cuts. VP J.D. Vance issued an unusual warning about air safety, noting that air traffic controllers and Transportation Security Administration personnel, essential staff who work through shutdowns, would be worried about delayed paychecks. If you're flying today, I hope, of course, you arrive safely on time, but you may not arrive on time because the TSA and the air traffic controllers are not getting paid today, Vance said on Fox News. What a weird thing to say. The U.S.'s longest government shutdown, which stretched over 35 days in 2018-2019 during Trump's first term, ended in part after flight delays caused by air traffic controllers calling in sick. Senate Democrats on Tuesday blocked the stopgap measure to fund the government through November 21 over Republicans' refusal to attach an extension of health benefits for millions of Americans that are due to expire at the end of the year. Republicans say the issue must be addressed separately. Both sides were posturing to blame the other and looking for advantage in 2026 midterm elections that will determine the control of Congress. Scheduled a near series of votes on Wednesday, hoping to pressure Democrats to break the ranks. I guess I think about 3 Democrats voted with the Republicans, so maybe there's a hope there. We'll see. Let me change something real quick before we move on. Okay. Let's see how this helps. Republicans weigh sweeping cuts as shutdown grips Washington. Let's dig into this a little bit more because one of the worries here is that the shutdown will lead to permanent job losses, unlike other shutdowns. So let's see um, what the implications here are. Republicans honed their shutdown strategy on Wednesday, openly debating how aggressively to use the opportunity to slash federal workers and spending, a hardball tactic that could force Democrats to cave, but carries political risk of backfiring. Republican House Speaker Mike Johnson on Wednesday said the White House would quickly move to cut the federal bureaucracy. The shutdown gives Republicans an opening to do some things that we would not otherwise be able to do because we would never get Democrats' votes for them, Johnson told Fox Business on Wednesday. The White House Budget Office gets to decide, now that services are essential, what programs and policies should be continued and which would not be a priority, he said. Shortly after, Office of Management and Budget Director Ross Vought announced in a social media post that the Trump administration would hold $18 billion in federal funding for infrastructure projects in New York City, including for the Second Avenue Subway Project and Hudson Tunnel Project. Vought cited concerns over diversity and equity practices rather than the shutdown, but the action directly targeted the constituents of the Senate Democratic leader Chuck Schumer and House Democratic leader Hakeem Jeffries, both of whom represent New York in Congress. Vice President J.D. Vance, however, downplayed plans to use the shutdown to slash services, saying Republicans don't want to lay anybody off, and he insisted that Democrats would be held responsible for any negative consequences of the government closure. House Republicans on Wednesday afternoon are set to discuss possible job cuts and spending freezes with Vought. Vought's budget office has called the federal agencies to craft plans to mass firings of government workers beyond traditional furloughs, advancing its goal of slashing the federal bureaucracy. With federal agencies and departments closed down, President Donald Trump and his allies have pointed fingers at Democrats with the idea that voters will blame them in the midterm elections next year. But the discordant approaches to seizing opportunity to slash government workers or payrolls demonstrates the political risk for the GOP as they attempt to dodge any blowback for their own tactics. Let's check this one out too. A government shutdown begins after talks break down. The first federal government shutdown years began early Wednesday. Let me just kind of quickly see here if there's any detail. The last shutdown took place in 2018, 2019 and broke the record for the longest in American history, which is also Trump. So I think that's some signal that's saying something. Federal agencies will now implement their contingency plans and send hundreds of thousands of government workers home to wait out a stalemate. Economic effects might be noticeable quickly as government spending largely ceases and economic data gets delayed, starting this Friday with what was scheduled to be a jobs report from the Bureau of Labor Statistics. These impacts could be mitigated if the stoppage ends promptly. Trump on Tuesday also promised to heighten the potential effects of a shutdown, in part to pressure Democrats, saying we can do things during the shutdown that are irreversible. He added later in the day, a lot of good can come from the shutdowns. We can get rid of a lot of things that we didn't want. The shutdown is also not the only Washington policy focus for investors on Wednesday. Markets will also be digesting new tariffs as promised duties of 100% on a slice of pharmaceutical products and 25% duties on heavy-duty trucks are scheduled to go into effect. This week also marked the last formal day on the job for government employees who accepted a Department of Government Efficiency program earlier this year called Fork in the Road, which induced tens of thousands to leave government service. Investors trying to make sense of these varied cross currents coming from Washington will likely be most attuned to how long this shutdown lasts and whether policymakers can find any off ramps to end the gridlock. All right, let's switch to macroeconomics. The ADP report was pretty shocking. Unexpected, plus the revisions to it as well. Let's dig into this. U.S. private payrolls post largest drop in 2.5 years. U.S. private payrolls dropped by the most in 2.5 years in September, and the ADP National Employment Report showed on Wednesday. But this is not a true picture of the labor market, which has stagnated as businesses remain cautious about hiring. With the release of the close to watch official employment report for September delayed after a lapse in funding forced the government to shut down at midnight on Tuesday, the ADP report could, however, attract more attention than usual from investors seeking fresh clues on the labor market's health. Tepid demand for workers, blamed by economists on a lagging drag from uncertainty stemming from tariffs on imports, as well as the rise in AI, is impending hiring. Immigration raids have also reduced labor supply, creating what the Fed chair has described as a curious balance. Quote, hiring is at risk as policy uncertainty driven by trade and immigration policy, as well as long-term demographic challenges that are adversely impacting the availability of labor supply, have caused businesses to pull back on hiring, end quote, said Joseph Brussels, chief economist at RSM US. Private employment decreased by 32,000 jobs last month, the biggest drop since March 2023, after a downwardly revised 3,000 decline in August. Economists polled by Reuters had forecast private employment increasing 50,000 following a previously reported 54,000 advance in August. So this is an 82,000 job miss. And on top of that, the revised 3,000, 57,000. So 82 plus 57, 139. That's a big miss. All the job losses were small and medium-sized businesses, as we have expected. Large businesses added 33,000 in positions, which is kind of interesting because you would think the large businesses are the ones that are implementing AI. So if there was any AI impact, which I don't think there is much at this point, we would see in the large businesses, I think. In terms of industries, only education and health services, as well as the information industry, reported employment gains. More interest rate cuts are expected. Government data on Tuesday showed a lethargic labor market, with job openings rising moderately in August and hiring subdued. Economists expect that labor market stagnation will spur the Fed to cut interest rates again in October. Yeah, I think that's a pretty done deal at this point. Supreme Court lets Cook stay at Fed for now. The Supreme Court is letting Lisa Cook remain as a Federal Reserve governor before hearing arguments in January about whether President Trump has the authority to remove her from the post. The decision is a setback for Trump, who has been pushing for Cook's immediate firing and trying to put his own stamp on the nation's central bank. His Justice Department on September 18 filed an emergency request to lift federal judge's order that blocked Trump from removing Cook for mortgage fraud allegations. Cook has urged the Supreme Court last Thursday to reject Trump's efforts to fire her, arguing it will harm central bank independence and disrupt financial markets. Cook was appointed by former President Joe Biden. Granting the president request for immediate relief to alter the status quo would sound the death knell for the central bank independence that has helped to make the United States economy the strongest in the world, Cook's lawyers argued in a filing. There needs to be some meaningful check on the president's ability to remove Cook, they added, noting that otherwise any president could remove any governor based on any charge of wrongdoing, however flawed. A White House spokesperson on Wednesday said that President Trump lawfully removed Lisa Cook for cause from the Federal Reserve Board of Governors. We look forward to ultimate victory after presenting our oral arguments before the Supreme Court in January. The fight in the nation's highest court comes after U.S. District Judge Gia Cobb on September 9 blocked Trump from firing Cook, saying that the alleged mortgage fraud allegations do not meet the Federal Reserve Act's for-cause clause needed to remove a central bank official. The White House appealed that ruling to the U.S. Court of Appeals for the District of Columbia Circuit, but in a 2-1 ruling on September 15, that request was also rejected. Cook participated in the Fed's policy meeting last week, voting to lower rates by 25 basis points. There are 2 more meetings this year in late October and early December. Interesting fact. Since the Fed was established in 1913, a president has never actually fired a Fed member. It's always the first time, I guess. This is an interesting one. Let's see. Reddit stock falls for second day as references to its content in ChatGPT responses plummets. Thanks. Reddit stock fell as much as 10% Wednesday, extending a decline from the previous trading. Actually, it's more than that right now. I think. Let me check. Let's do the The current data. Oh, no, it is 10%. I thought it was more. Okay. Reddit stock fell as much as 10% Wednesday, extending a decline from the previous trading session amid new data that showed the use of its content in leading AI chatbot ChatGPT had plummeted in mid September. Reddit content was cited in just 2% of ChatGPT responses on Tuesday, much lower than the 9.7% ChatGPT responses that cited Reddit the previous month, according to data from AI search engine tracker PromptWatch. At its peak in September, Reddit was cited in more than 14% of ChatGPT answers. I actually have never seen a Reddit reference in my answers from ChatGPT. Yeah, I never really used Reddit either. Still, Reddit was the top social platform cited by the leading AI chatbot, with its content surfacing 4.3% ChatGPT's responses on average in September. Meanwhile, LinkedIn, the second most cited social platform, was referenced in only 0.4% of ChatGPT's answers during the month. Reddit is often used as a social media version of a search engine, with users frequently appending Reddit to online queries when looking for advice or instructions. Google still dominates traditional online search. That means Reddit, like other search resources, faced a potentially existential threat with the rise of AI chatbots, beginning with the launch of ChatGPT in late 2022. Reddit was circumvented that threat of displacement by inking billion-dollar data licensing deals with ChatGPT maker OpenAI and Google to use its content for their AI models. Reddit has also launched its own AI search and advertising tools. In mid September, Bloomberg reported Reddit was also looking to strike its next data license agreement with Alphabet owned Google and was set to discuss dynamic pricing for that deal and its partnership with OpenAI. Such dynamic pricing would allow Reddit to be paid more as its content is used more often in companies' AI answers, Bloomberg wrote, citing unnamed executives. The news sent shares surging in mid September. Hedgeye risk management analyst Andrew Friedman, who holds a short position on the stock, said he doesn't yet think the data is indicative of a larger trend, but he suggested that the data could come up as Reddit renegotiates those licensing deals. I generally believe that OpenAI and Google have much more leverage in licensing renewals versus what Reddit management thinks, he wrote in an email to Yahoo Finance. Outside of Reddit's content sharing deals, investors have closely watched the site's own web traffic, with the platform's daily active users susceptible to changes in Google searches algorithm. I think it's a dying business. All right. Couple of automotive news. Detroit Mayor Duggan says tariffs are squeezing Michigan's auto industry. Detroit mayor said Motor City's economy remains resilient, but warned that tariffs are starting to hit automakers and their suppliers. The Canadian tariffs are the issue, he told Yahoo Finance at Ford's Pro Accelerate conference in Detroit. When you put a tariff on Canada, you're putting a tariff on cars made in Michigan. And we're starting to feel that, and I hope the president gets that sorted out. Detroit has three operating vehicle assembly plants, including the Detroit Assembly Complex, which is owned and operated by Stellantis. While some government officials, such as Treasury Councilor Joseph Lavorgna, argue that the effect of tariffs, once reflected in government data, will be relatively small, the mayor noted that corporate income taxes are already showing strain. Our corporate income taxes are down because they're off of corporate profits. The tariffs have hit them, Duggan said. Still, he noted that personal income taxes are not down, suggesting that people are still working. Okay, moving on to that. Cox Automotive forecast September new vehicle sales are up 6% year over year. Record electric sales help charge strong third quarter. Ooh, nice play on words. September new vehicle sales are expected to show a resilient market that continues to shake off significant policy changes and economic uncertainty. The September new vehicle SAR, or seasonally adjusted selling rate, no, annualized rate, is expected to finish near 16.2 million, an increase from last year's 15.8 level and a slight uptick from last month's 16.1 million pace. Sales volume is expected to rise 6% from last year, but decline 14.9% from the previous month due to 3 fewer selling days. The new vehicle sales pace has been surprisingly strong this summer, and though the third quarter, as uncertainty around third tariff policy has decreased, said the senior economist at Cox Automotive. Continued low inflation and unemployment rates, coupled with strong stock market, have kept consumers in a buying mood. A key contributor to sales in recent months has been an increase in EV sales as buyers rush to the market before $7,500 tax credits expire at the end of September. Okay. You can see different segments, sales forecast, and market share. Let's read the part about EVs. With a surge in EV buyers in market before the end of government-supported tax incentives, Cox Automotive is forecasting that a record 410,000 EVs will be sold in the third quarter, a significant increase, 21% year over year, and a jump of more than 30% compared to Q2. The share of EV sales in the third quarter will likely be close to 10% of total sales, a record. Now, that's a good segue to the next one. Ford CEO sees Trump policies cutting U.S. EV market in half. Ford's leader warned of a bleak outlook for electric vehicles as President Donald Trump's policies breathe new life into gas-powered cars. The elimination of a $7,500 consumer tax credit and a softening of emissions rules will sharply curtail EV demand in the U.S., according to Chief Executive Officer Jim Farley. He predicted the share of zero-emission vehicles, currently around 10% of the domestic market, could fall by half. Yikes. And finally, Zoox is expanding to Washington, D.C. Zoox is expanding its autonomous vehicle testing in Washington, D.C., marking its first mid-Atlantic location. The city's complex street layout and diverse weather conditions present unique challenges for testing. Zoox will begin with manual mapping before progressing to autonomous testing later this year. And on that note, thank you very much, everybody, and I will chat with you all next time. Take care.